Morning Talk on SAFM.
5 minutes after 11, you're listening to Morning Talk on SAFM, South Africa's news and information leader, with me, Rowena, Baird. And as we get into the final hour of today's show, we take a look at something which many of us would much rather not talk about or deal with, the issue of income tax. It's been around forever, for time immemorial. I mean, the first recorded instance of tax was in the year 10 AD, when Chinese Emperor Wang Mang brought in a tax of 10% on all profits for any skilled laborers and professionals. And in the year 1188, Henry II introduced income tax in the UK, and he demanded that each layperson pay a tenth of their income and movable property to the king. So it's been around forever. It will be around forever. And to look at the history of tax further, we're joined by Charlie Stewart, the managing director of 2Stroke Interactive. Is that how I say it? Hi there, Mr. Stewart. Welcome. Thanks for joining us.
Hi, Rowena. Great to be on the show this morning.
Thanks for coming through. We're also taking your calls if you'd like to ask questions, pose questions to Mr. Stewart on 0891 104 207. Our SMS line is 34701. Let's talk about, I just mentioned that tax has been around forever and it's going to be around forever. So we may as well make peace with it, right?
Yeah, I think you're absolutely right there, Rowena. You know, Albert Einstein, who is, I think, credited as being one of the world's most intelligent men, once said that he felt that the hardest thing in the world to understand was income tax. So I think that you're certainly not alone, and I'm not alone in finding it a pretty complex and difficult subject. And I think that, if you're ever standing out in the street and a nosy neighbour starts talking to you, the easiest way to kill the conversation dead is to ask them about their tax.
But why isn't it simplified? Why is it so complex?
Well, that's exactly why we embarked on this research project. I mean, I think that the reason we're talking today is we did some research for one of our clients, the financial services company Direct Access, to look at tax. We're in the middle of tax filing season at the moment, and most taxpayers need to have their tax return submitted by late November this year. So we thought we'd just take a look at what tax is, what taxes we pay in South Africa, and try and demystify the whole subject. It's such a it's a boring subject. It's a frightening subject. I mean, most of us are absolutely terrified when we start thinking about tax.
And be terrified. Okay, and be terrified because we're thinking we owe the tax man, or what?
Well, yeah, I mean, absolutely. It's really, it's such a strange topic, tax. I mean, I think when we talk about tax, we all assume that income tax is the big one. Income tax, actually, I think last year contributed about 35% of the total tax revenue that was raised by government. So, although we all necessarily and typically focus on income tax, there are many other taxes out there that we pay on a daily basis. I mean, if you go into a petrol station in Joburg today, and assume you're a taxi driver, you're filling up your taxi, a fair chunk of the money that you're going to hand over to the petrol station is tax that's going to go to the government. So, we're paying tax pretty much every which way.
0891 104 207. We're talking to Mr. Charlie Stewart, the managing director of 2Stroke Interactive, about tax and what it is and why it's important that we pay our taxes. Let's talk about the principles of the principles that are common to most income tax systems, I guess, in the world, and where are the variations and where does South Africa fit in?
I think the starting point for income tax is really understanding whether or not you need to submit a tax return and how you go about paying your tax. The majority of people who work in South Africa probably don't need to manually submit or electronically submit a tax return. Because there's so much confusion around this, we created a very, very simple decision tree that allows people to, at a glance, see whether they need to submit a tax return. You can find this. I'm not sure whether you had a look at the tax guide on the Direct Access website, but it's very easy to find. If people want to go and have a look at it, they just go to Direct Access's website, directaccess.coza, and they look at there's a content section on the site called Topics, Tips and Tools. And if you just click on that, on the page that it takes you to, you'll see the tax guide.
And the first question you should be asking yourself is if you earn more than 250,000 rands per annum. Is that the beginning?
Yes, I mean that's really the beginning, and if you earn more than 250,000 per annum, then the next question you need to ask yourself is: have you been working at the same company for more than a year? If you've been working at the same company for less than a year, then you will have to submit a tax return. If you have been working there for more than a year, then you need to look at whether you receive any other form of income aside from the money that is paid to you by your employer. Maybe you moonlight, maybe you do a second job. Perhaps you get income from a property you own or from some shares that you own. Again, if you receive any additional income, you will need to submit a tax return.
So you earn more than 250,000 rands, and you've been working at this company for more than a year. You ought to file a tax return.
Yes, sorry, if you've been working at a company for less than a year, you'll need to file a tax return. And there are a number of other aspects that you can find on this decision tree that we've published that gives you a very, very quick overview as to whether or not you need to submit a tax return. Now, if you have to submit a tax return, there are a number of ways you can do it in. Unfortunately, the deadline has passed for any physical returns that people were writing out on forms that they wanted to post or drop off at SARS. The deadline for those returns closed on the 27th of September. But the good news is that if anybody is filing a return using e-filing, which you can do using the SARS website, the deadline is on the 22nd of November for non-provisional taxpayers. Now, a non-provisional taxpayer, that really accounts for the majority of people who work in South Africa who are employed. So it's very, very easy to go to the SARS website and to create a profile for yourself and then submit your return online.
Okay, let's go back to the top of the tree if we could. What if you don't earn 250,000 rands per annum? You earn less than that.
Then you are not going to have to submit an online tax return. The reality is that your employer through the pay-as-you-earn system will already have deducted tax if you're needed to pay tax.
0891 104 207 is our number, and our SMS line is 34701. You hear of and read about all sorts of tax avoidance strategies, and you may or may not be able to go to tell us about those. Where taxpayers find legal methods to avoid paying taxes. Can you talk us through some of these, obviously without compromising SARS?
Yeah, it's always an interesting topic, isn't it? And I think that there's been a lot of debate in the media over the last year or two about companies who avoid tax or who find ways of minimizing their tax burden. I think there's been a lot more commentary in the US and in the UK than there has been in South Africa. So I don't really have any information on companies at a local level who are not paying tax. But there's certainly been, if you just do a quick search in Google on corporate tax, you'll find some very significant controversy.
And
I think taking it down to a more populist level, anybody who's a football follower will probably have seen news of Lionel Messi. He's been in court in Spain this week and last week. He was in trouble. Apparently, he failed to file tax returns for quite a number of years, and so the authorities in Spain have been going through a process of trying to charge him for tax evasion. I think he paid back something like 10 million euros. That's an enormous amount of money. That's over 100 million rand in back taxes to try to avoid going to jail. But that whole case is going through the courts at the moment. Closer to home, we obviously had the issue with Julius Malema. SARS earlier this year auctioned a couple of his properties to try to recover some of the taxes that he owes the government. So I think that the message from tax authorities around the world is that it doesn't matter how famous you are or who you are, they're probably going to get you if you don't pay your taxes.
But are there loopholes in the tax system? We'll talk about those in a bit. Let's first take a call from Tumelo in Kimberley. Welcome.
Hi, how are you?
Fine, thank you, Tumelo. Thank you for holding.
Good. I just want to ask, if you earn that underneath the 200 and something, but then you've got a company car that you travel with, do we still have to claim for anything like that?
I think that if you have a company car or if you receive any benefits, then you probably do. I think your best advice would be to go onto the SARS e-filing system or to ask a tax consultant for specific information relating to your situation. One of the nice things on e-filing recently is that SARS has introduced a live chat or a live help session. So if you're on a computer and you are on e-filing, there's a button you can click which will allow somebody sitting in the SARS support centre to actually view your computer screen and give you guidance as you're filling information in. So that your best bet is probably to go onto e-filing, to register for e-filing, and communicate with a SARS representative as you're submitting your return.
All right, no, thank you very much.
Thanks, Tumelo. Are there always loopholes, Mr. Stewart, in the tax system that can be manipulated, particularly if you're an individual taxpayer?
There are some really weird ones. I mean, one of the reasons, I don't know whether you've ever wondered why newspapers are so big. Reading the Sunday Times, it's such a massive newspaper. Every time you turn a page, something crumples or breaks. One of the reasons that newspapers have got such large sheets of paper is because in the mid 1800s in the UK, a tax was levied by the government called the knowledge tax. And because newspapers were being taxed on each page they published, they started publishing bigger pages. The bigger the page, the more information they could fit on it, so they needed fewer pages. So that was just one example of how organizations are approaching tax and are finding ways of avoiding paying tax. Another weird one was, again, this is an example from the UK. In 1691, England decided to place a tax on the number of windows that people have in houses. So people started bricking up their windows. The actual impact of that was that people were simply not getting any air into their houses, so their health started declining. And I think that tax was repealed in the late 1800s after an outbreak of bronchitis or some sort of some other disorder in the UK. So it's funny the things that organisations and people do to try to limit the amount of tax that they pay.
And maybe sometimes it's not even tax evasion. Perhaps it's just based on the fear that we have, the fear of tax that we have, that you'd much rather not even talk about it, not entertain it, and not know what is happening in that regard.
Yeah, absolutely. And again, coming back to what I said right at the beginning of the show, is that when we talk about tax, we often think about income tax. Income tax, that feels very personal. I work, I earn money, the government takes it away from me. Is that really fair? But there is so much other tax is paid without us really thinking about it. 35% of the government's tax revenue comes from income tax. The rest of it comes from other forms of tax, consumption tax, VAT. Consumption tax. I mean, if you're a smoker, 11 rand out of every packet of cigarettes you buy is going in tax. So there are lots and lots of other forms of tax that we do pay. I think that on petrol, on import tariffs, that really accounts for about 17.5% of the tax revenue that government earns. Company tax accounts for about 20%. Now, again, company tax is a slightly strange one because people would look at a company that makes money and think that it's the owners of the company who are paying the tax. But the irony is that it's actually probably everybody who works for the company who's being impacted by that tax. If the company wasn't paying corporate tax, it would probably have more money to pay to its employees. It would have more money to give to its shareholders. It would have more money to push into the economy as a whole. So, each of us is probably still, is subsidizing an element of the tax that our employers, our companies pay.
Here's an SMS that has come through, Mr. Stewart. It reads, what if you are self-employed? Do you pay tax?
If you're self-employed, then you will need to submit a tax return. If you're self-employed, you probably fall into the category of provisional taxpayers. Provisional taxpayers are people who own their own businesses, or they're directors of companies, or they derive revenue from other activities. For provisional taxpayers, the deadline for submitting tax returns is the end of January next year. That's the 31st of January 2014. For non-provisional taxpayers, that's the majority of people who are employed in South Africa and who earn enough money to sit above the income tax threshold. They need to have submitted their returns by the 22nd of November.
And what happens when it's actually the taxman who owes you money?
Well, there were an awful lot of people last year who received rebates. I think last year SARS repaid over 14.5 billion rand to people, which is a pretty considerable amount of money. So as soon as you submit your tax return, I mean, the SARS will, as you go through the e-filing process, you'll see that SARS asks you lots of different questions. The first few questions are really around how much you earn, and the further into it you get, you'll see SARS starts to ask you questions such as, do you have a medical aid cover? If you have medical aid, then SARS will give you a rebate based on that. Similarly, you may get rebates based on other expenses that you incur, if you incur expenses on behalf of your business, perhaps mileage or other expenses like that. The nice thing is that once you have completed your e-filing submission, before you actually press submit and send it off to SARS, you can do a quick calculation to see how much tax you're likely to owe SARS, or indeed whether SARS owes you tax. If SARS does owe you money, then it will give you a rebate, and it'll typically do that extremely quickly. I think that last year, in the 2012-2013 tax year, 95% of rebates were paid within 72 hours of people submitting their e-filing return. So the money will be in your bank account pretty quickly.
That sounds good. Now, if somebody were to question why they're paying tax, because I don't know, there's all this corruption and there's a lack of service delivery in my area. How do you explain to that person the importance of paying your taxes?
Yeah, it's an interesting one, isn't it? I don't know whether you're familiar with the story of Lady Godiva.
No.
Lady Godiva was, clearly as the name suggests, she was a member of the nobility in the UK. She was protesting about tax, a couple of centuries ago, and rode a horse naked, through England to try to draw attention to her protest. And I think that many of us do protest about tax. Not many of us are particularly happy with it. But the reality is that government needs to provide infrastructure. Somebody somehow has to pay for roads to be built or roads to be fixed, for schools to operate, for basic services to be maintained, and that's where our tax revenue goes. It's absolutely critical that the government is able to collect money to spend on initiatives. The fact that there is corruption is unfortunate, but the majority of the revenue that is brought in through tax receipts is spent well and is spent effectively.
And what documentation do you need when submitting a tax return?
You're going to really just need the basics. You're going to need your income tax number. If you have registered to pay tax, you should be able to find that. If you can't find it, then you can just quickly call up SARS and they will give it to you. You'll need your identity number and you'll need your bank account details. Beyond that, if you anticipate that you're going to receive a rebate, you'll need financial statements that reflect sort of income that you earned. You'll need your IRP5, which your employer will give you, which will give you details of the salary that you've earned over the last 12 months, and indeed the deductions that came off that. If you receive a travel allowance, you'll need information on your car's odometer. That's the mileage or the kilometre reading at the beginning of the year and the end of the year. Now, bear in mind that the tax year runs from the 1st of March to the end of February. So we're looking at, for people who are submitting returns now, we're looking at information that relates to the end of February 2013. And any other information that relates to income or expenditure. For example, if you have medical aid, your medical a company will give you a tax certificate that confirms the amount of tax that would have been paid on your medical aid contributions.
Okay, let's talk about our tax laws as they relate to international investors into South Africa. Do they encourage and promote international trade?
Well, I think there's quite a lot of debate around that at the moment. I think that, it's fair to say that historically they have done. Businesses have always been very keen to invest in South Africa. And I think that South Africa is viewed by most international businesses as a gateway into Africa. I think there's always debate as to how helpful those tax laws are, and I'm sure that there are many people who would argue that tax laws should be made more lenient, that if less tax was paid by international investors, more would come into the country. But I think, on balance, businesses do continue to invest in South Africa, so I think there must be some semblance of value in the tax laws that we have.
We've just received 2 SMSs, and they're really similar, and the SMSs came in on 34701. You could send yours. The first one from Lindelani reads, renting my house for extra cash, am I supposed to be paying tax? And Seesaw in Standerton also wrote, hi, I'm renting out my property to a few people, making 5,000 rands off them, 5,500 rands bond and 800 rands water and land. Am I to pay tax?
Yes, again, I think that a lot will depend on the total value of the income that both of them receive over the course of the tax year. But assuming that they have a regular job and this income is in addition to that, then yes, I suspect they will have to pay tax. But once again, the easiest thing for them to do would be to contact SARS or to go onto the SARS e-filing website. That will clarify whether or not they do need to pay tax.
Okay, and are there global rules that, or whatever conventions, that actually restrain or limit governments from taxing their citizens who operate or invest in other parts of, abroad, in other parts of the world?
Yeah, I think that there are some regulations around foreign exchange, but by and large, taxation across different countries, there are a number of different regulations that govern how tax if you have investments overseas. There are various withholding tax conditions. So it does become rather complex, and I think that anybody who is investing overseas or who derives revenue from overseas probably would need to speak to a tax consultant to get clarity around exactly how all of that would work. I think that if we compare South Africa to other countries around the world in terms of our tax regime, we're not too bad off. From a VAT perspective, our VAT sits at 14%. In the UK, it's 20%. So we're definitely paying a lot less VAT than many others. In terms of income tax, our highest rate of income tax is 40%. In Sweden, it's 56%. Denmark, it's 55%. So again, we're much better off than they are. There are some countries that don't have any income tax. If you want to pay nothing on your earnings, then you'd be well advised.
Where do we move to? Where do we relocate
to? Monaco or to Bermuda. But I think the flip side of that is that although they don't have income tax, they still need to pay for infrastructure. They still need to pay for all of the services the government provides. So their consumption taxes will be much higher. So you'll find that you pay much higher import tariffs on products that you buy in shops. You probably pay a higher sales tax. So it all squares off in the end.
Yes.
Unless you're extremely fortunate. I mean, I think that some of the oil-producing countries in the Middle East, because they derive such enormous revenues from foreign sales of oil, they are able to subsidize the whole tax regime much more effectively than most other countries.
Well, you mentioned that your company did some research into tax issues. What sort of questions were you asking?
Well, I think the basis, Rowena, for the research was really just to try to define how we can make tax easier for people to understand. We did this research for Direct Access, the financial services company. Direct Access is very keen to try to demystify so much of the complexity that surrounds finance, be it tax, be it the affordability of goods and services in South Africa. And so the starting point for the research was really just to look at the fear people have of income tax. We all are resistant to paying income tax. So we wanted to understand how difficult it really is to submit an income tax return, and show people that it's really not that difficult. Also show people what they need to think about. Help people understand whether they need to submit a return in the first place, and show them where the money goes to that they pay in their tax. So that was really the starting point for it. But I think that, moving on to, I suppose, the fun side of it, we all do suspect and believe that tax is such a boring subject, but it isn't really. There are a lot of fun stories around tax, and there are many, many nice anecdotes. In fact, it's quite interesting listening to you just talking to Bongi a moment ago. I truly echo his sentiment about how much he loves South Africa. He's just returned from the UK.
Yes.
I grew up in the UK. One of the reasons I'm living in South Africa right now is because it's a great place, and we hear, and I think we have a slightly more tongue-in-cheek attitude to life than many people do in other parts of the world. And that's why it was great to surface some of these more interesting tidbits about tax. I'm sure that you're probably familiar with the story of William Tell. William Tell was the guy who had to shoot an apple off his son's head. You probably didn't know that the reason he had to shoot that apple was because he'd resisted paying his tax. So the governor of the state in Switzerland in which he lived forced him to take a shot at his son. Another little bizarre tax snippet for you.
And did it get the apple or the head?
He got the apple, fortunately.
Thank goodness for that. Let's talk to Jay from Durban. Hi there, Jay.
Hi, good morning to you.
Welcome.
I just want to make a query and a question. Firstly, the question is, why should pensioners and disabled people be charged that VAT? It is a kind of a tax, isn't it? Okay, the question might come up is, they will go and purchase beyond the amount that the pension payout and what have you. They can put structures in places to say within that amount of the pension, or the grant what they're collecting, they cannot buy more than that. And our pensioners and senior citizens have contributed quite a lot to the country economically and otherwise. So I think they should be exempt from paying the VAT.
Okay, let's hear how Mr. Stewart responds to that. That pensioners and disabled people should be exempt from paying VAT, Mr. Stewart?
Yeah, it's a very interesting question. I think that it would be very, very difficult to police it. It would be difficult for organisations, for retailers, for people who charge VAT, to distinguish between a pensioner and somebody who isn't a pensioner. I do absolutely share the sentiment that pensioners who generally have lower incomes than many of the rest of us need to be given more privileges. Having said that, the majority of pensioners will still use a lot of the facilities that government provides. Many pensioners will still use the roads. They'll still use the infrastructure that government provides. So, as well as sharing some sympathy and some sentiment towards their income levels, I do think that there is certainly a case for them to have to pay some form of tax.
Okay.
The majority of them will not pay any form of income tax unless they have significant investments or sources of income. But yeah, I think that I think she's very, she's absolutely spot on that a lot of the invisible taxes, things like that, or some of the other taxes that are paid, pensioners will be paying.
Let's talk to Dorong. Hi there, welcome, Dorong.
Hi, Rowena, how are you?
Very well, thank you, Dorong.
Yeah, thanks. I think your guest there is quite correct, but I think that view is still a little bit narrow in the sense that even, a disabled person pays a tax, and a pregnant woman and a child who's not yet born is paying tax. Our tax laws in general in this country, they must be reviewed in the sense that all the public service servants, they are paid out of the tax money, but they are being charged tax. It doesn't make sense.
A couple of SMSs have come through. Hi, would like to know if you cash in your pension fund to start a business, what are the tax implications and percentages? That's from Tabile.
Yeah, again, I mean, I think for answers to questions like that, you really would need to speak to a proper tax consultant. I think that, when you're starting up a new business, there are lots and lots of considerations. It's absolutely critical that you get proper advice from a qualified professional.
And then what if you have to pay tax backdated to 2007 because your employer used the wrong codes for car allowance? That's an SMS that has come through.
So yeah, that's something of a challenge. I think that last year SARS issued a fair number of penalty notices to people who had similar issues, who had either submitted incorrect forms in previous years. I suspect again that if you go onto e-filing and you speak to one of the representatives from SARS, they'll give you some very clear guidance through the process. I think one of the things that SARS has been trying to do over the last couple of years is really put a human face to their organisation, to try to dispel the myth that they're this sort of angry
and they're uncaring
and they're this frightening person. So for the most part, you will find that if you are open and honest with them, that they really will listen to you and that they're there to help you. SARS needs to collect money, and it knows that the best way of collecting money is to work in partnership with us, the taxpayers, than to stand in an opposing camp and to be horrible and frightening and scary.
And to be hostile, yes, indeed. Yeah. Okay, much earlier you mentioned, just to talk about the funny and lighter side of tax, you mentioned that newspapers have such a large-sized, such big sheets of paper because of the British 1816 tax on newspapers. There's another one on the Russian Emperor Peter the Great, who placed a tax on beards in 1705. Tell us about that.
Yeah, I know, and I think that there are so many of these fun little tax stats, and so when we did this work for Direct Access, we really wanted to try to enliven it, to make tax much more accessible, and by digging out some of these tax stories, it really achieves that goal. Yeah, I think that Peter the Great, back in 1705, he was one of the Russian emperors. He went on a trip to Western Europe and saw all of these handsome, clean-cut looking people over there. Got back to Russia, saw everybody over there was had sort of straggly beards, and decided that he needed to give the country a makeover. So he imposed a beard tax. I think the intention would be to try and encourage everybody to cut their hair and have a close shave and present a slightly better-looking image of Russia.
And what about Denmark's fat tax? What was that about?
No, that's a funny one. I mean, I think that many of us might have heard stories about airlines threatening to introduce additional penalties for larger passengers. I don't think that any of that has really come to fruition as yet. I don't think any airline would be brave enough to try to tax larger people. In Denmark, they're naturally concerned about obesity, and their fat tax doesn't tax you if you are overweight, if you're larger than average size. But what they are doing is they're beginning to tax foods that contain more than 2.3% saturated fat. So it's a very interesting way of trying to encourage people to eat more healthily. If unhealthy food costs more because there's tax on it, then you probably will start thinking twice before you load some chips into your trolley in the supermarket. You might go off and buy some fresh potatoes instead.
Absolutely. Okay, now that tax season is on, just run us through it again. When should we be submitting our returns?
Well, you already missed the deadline to submit returns manually. So if you're a non-provisional taxpayer, you must submit your e-filing return by the 22nd of November. So that still gives you a few weeks in which to complete the return. All of the information that we've discussed today is in the tax guide, which people can find on the Direct Access website, which is www.directaccess.co.za. Anybody who goes onto the website, on the homepage, you'll see a section called Topics, Tips and Tools. If you click on that, that'll take you through to lots of interesting content that Direct Access has produced around financial topics. One of the articles is this guide on tax. And so if you look at that, you'll see the very simple decision tree that helps you understand whether or not you need to submit a tax return. If you do need to submit a tax return, there is then a very detailed guide that it gives you information on how you need to go through the process. It tells you the typical information and documentation that you need to have before you start. And as I say, to make it fun, we've thrown a few light-hearted facts through the document.
Lovely. Thank you so much for talking to us and for demystifying this issue of tax. Charlie Stewart is Managing Director of 2Stroke Interactive, talking to us about tax issues.